We had a major setup, event, and follow through and rebound. So let's go into what happened here. First and foremost, full disclosure, I'm a fan. I've been a big Trump fan for a while. And that's really for the same reason that I've been a Brexit fan as well. So someone asked me that today. A lot of people actually asked me to hear, like, what happened, what went wrong, you know, what quote unquote went wrong. Why am I a Trump fan? Why do I support Donald Trump? And I'm going to answer that question. I'm going to keep it off of personalities and my opinions of Mrs. Clinton because I don't think very highly of her. But I think being a gracious winner is often one of the best policies. It's never nice to rub people's noses in things. The reasons I don't like Mrs. Clinton are very out there. I think everyone pretty much knows them. Honesty and trustworthy and all that business. But let's talk about Trump for a minute. And I don't want to get into, you know, the media bias about the Islamophobic, homophobic, xenophobic, you know, the deplorable scenario. I want to talk specifically about his policies and why the market reacted the way it did today and where I see it going from here. So Trump's was sort of the same setup as Brexit, believe it or not. We had a market decline. In the weekend review, I said we weren't at the Brexit setup because we hadn't had the rebound. And then we got a pretty big rebound when everyone kind of knew Trump wasn't going to win. And then you had this 124 point or so sell-off in after hours, which was oddly about the same as the Brexit, a measured move. So we got to lock limit down, which means that you can only buy, you can't sell futures anymore. And then we basically had a V-bottom reversal right off the lows. So I think you had this was, in my view, a pure trading setup. So the fear with Trump was I think really mostly media created. I think he's good for a few reasons. One is it's been so long since we had someone in office who even talked about pro-growth policies. Trump wants to repeal and replace the Obamacare tax, which has been throttling business. It's been causing the part-timing. It has gotten to be super-duper expensive. I know even from my own sense, I have to, unfortunately, because I trade, I'm in my own business, I have to have Obamacare. And it is going absolutely, less doctors are taking it, more, the price is going up, the premiums, the deductibles. It's just, it's absolutely wild. So the repeal and replace, I think, is going to be great. He is talking about pro-growth policy, about trying to get growth to 4%. He's talking about incentivizing companies to repatriate their money, and they would be taxed at a lower rate, provided that they use it to invest in their businesses. I'm going to come back to that in just one second because that's a very key component, and for hiring. So you'd be able to bring back the money, and then either hire U.S. workers or invest in businesses. And when you read the Fed minutes, one of the big issues that the Fed says is that companies aren't investing in their businesses, and they can't see why. And we all know what the reason is. It's because of regulation and anti-business practices. So that is one thing I also see as positive for a Trump presidency. It's almost like we've gotten so addicted to this low-growth, easy money economy that we have like Stockholm syndrome or something. We're like captured by it, and just the thought of anything else is frightening. But I assure you that a pro-growth policy will do wonders. You could see today that there were a few interesting things that took place in the market. One was interest rates went up big today, and I'll tell you why. I think that obviously. I think there's threefold to it. One is, of course, the fear that the Fed will raise interest rates in December. I think that might be a little bit less likely now, though, that Trump won. It's not a continuity, and there's some, I guess, risk there. So maybe they don't go, maybe they do go. I'm still going to say that they do go, just because I'd rather be safe than sorry. Two was Fitch came out and said that if Trump does the tax cuts. Oh, by the way, Trump wants to cut taxes. He wants to cut corporate taxes from 35 to 15%. That's a windfall. You're talking about S&P in the 3,000s if that happens. That's huge. That's a huge shot directly to the bottom line of companies. We have the highest corporate tax rate in the entire world. Trump wants to cut that down big time, big league, as he would say. So that's a big one. Also, he wants to help the banks make some money. He wants to take them from being wards of the state under the Elizabeth Warren Utility type of act and repeal Dodd-Frank. That nothing in Dodd-Frank, just so you know. And I do think Wall Street does need, and banking does need regulations, but nothing in that bill would prevent what took place in 2005 through 2008, really 2005 through 2007. And that was the reckless mortgage lending. Nothing in there. So you have a financial bill that was meant to stop financial crises and did nothing. So these are all huge net positives for the stock market. Yeah, so that's why I supported Donald Trump for his run at the presidency. I wanted a pro-growth policy and somebody who would actually renegotiate the trade deals we have. We get, like his words were, we're a whipping post, that you have a situation where cars are like brought into the U.S. and we're not taxing them proportionally as our cars are in foreign countries. The trade deficit which we have is egregious, and it doesn't need to be that way. And that to me is a big plus for a Trump presidency. So that's why once you got past the fear mongering, remember with Brexit, it was the end of the world, right? For 2 days the market dumped and then it made new highs. Today it couldn't even be 2 days. It couldn't even be past the morning. By pre-market we were already kind of in rant mode. So I believe that this was all a lot of fear mongering. You have a lot of people who make a lot of money on a corrupt government system, and they will do a lot to protect it, including make people terrified of the change. This is the change we needed, and I am, for the first time in a long time, actually a lot more optimistic on the United States and the prospects for growth in this country. So bravo to that scenario. Now, just because I was a pro-Trump supporter doesn't mean he's off the hook yet, just so you know. He needs to execute on these plans now, and I'm hoping he starts with the Affordable Care Act. If he starts screwing up, you'll hear it from me. I will be very critical. So that's the story. Anyway, that's the story with the election. A funny few things happened today that I think people were confused by, and I will explain. First and foremost, everyone thought if Trump won, the gun stocks would be up huge. They were actually down, and that is because the Second Amendment is now safe. There is no immediate need to rush out and buy firearms, which would put a huge pop into short-term earnings, thus giving stocks a boost. They'll probably be more smooth over time. So that was the story with the firearm stock. So someone asked about gun stocks. Why was Amazon down? Someone asked. During the primaries and election season, Trump had talked about Amazon having a monopoly, and he wanted to, by the way, I want to talk about healthcare in one more second now that we're talking about monopolies. And if that does happen and there's some regulation in there, that will hurt Amazon a lot. Maybe he tries to level the playing field a little bit and take away a bit of their monopolistic status. I think it's a little bit deeper than that. I think that was the reason that I read in some blogs. But the reason why the FANG stocks were weak today is a little bit counterintuitive. In a low growth environment, which we have been in for 8 years, other than 2013, which was really just an easy money rally, we have not had stocks that grow. And under a Trump presidency, these sectors like coal, by the way, speaking of coal, I have been saying the hidden tell for a Trump presidency was going to be KOL. And that has been in ramp mode for months now. And it was up ginormous today. So that was also my thesis on why I thought the Trump presidency was a lot more likely. Speaking, and I don't want to jump all over the place too much, but the healthcare, a way Trump is going to get the healthcare prices down is and these stocks were down big today. The health insurers, the United Health, and so on and so forth, they are given an exemption from the monopoly rule, and there are barriers around states, and these companies can, for the most part, charge whatever the hell they want. Trump wants to take the borders down and allow in more competition. If you have more supply, price goes down on the curve. Obamacare basically forced more demand without increasing supply, and you had a shift of the curve up, and that's why the prices are up so much. So that is my that's my take. That's my take also on the reason for the move in the healthcare stocks, and another, by the way, pro business and pro consumer type of a move. You know, I'm seeing all these comments down here about the ignorant and so on and so forth. This is a fact. These are just pure supply and demand facts. And if you don't understand a supply and demand curve, just Google it and take a look. See what happens. Anyway, that's the story with that. Why were the momentum stocks weak today? Because you had other sectors now that can grow, and there was a shift of capital from everybody being crowded into just a handful of stocks that can grow in that environment into a new environment that is more hospitable to these other industries, like Caterpillar, for example. If we're going to build a wall, if we're going to get back into coal, these machines are what is going to be needed. So you saw a big move in the resource stocks today, like for the Rust Belt and so on and so forth. So that's the reason why I think these momentum names were a little bit weaker today, because they're kind of now not the only game in town. So that's the deal with regard to those stocks. A little bit more technical with regard to those stocks. A lot of them reported pretty good earnings, and they couldn't go up on good quarters. And if you can't go up on good quarters, you kind of come down a bit. So I think it was a combination of a few things with regard to that. I did some pretty detailed analysis as far as Amazon goes in my weekend review video on Sunday, which I will do a follow-up to. I think it's still on course to retest the kind of a breakout area. You had the bit of a bounce now. You didn't quite get to the 50 MA, but it's kind of coming back down again. I'll get interested a little more into this one when it starts getting to like the 200 MA. Then I would start selling some out of the money puts. The measured moves that I saw possible were roughly close to 700, like 698-ish, 696, and then potentially down to like 624s. So somewhere in that area, in the mid 600s to high 600s, that's where I'd be interested in selling some out of the money puts. So that's the story with Amazon, and I'll show that again in more detail in the weekend review video, where I could show technicals a little bit more. Tesla, why did Tesla get smacked up? Tesla benefits a lot from subsidies, and Trump has said he's going to pull subsidies. I don't believe in funding business models that can't sustain themselves, so I think that's what hurt Tesla a little bit. But more on with Tesla, that stock is going to be a little bit vulnerable until two things happen. One, it can clear the 200-day moving average, which was the support, now it's resistance. And two, they get the capital raise for the Solar City deal out of the way. So Tesla, in my view, is going to just be in a trading range. So when it's weak, sell out of the money puts, and when it's strong, sell out of the money calls, and just be short volatility for that for the time being. IBB. So we all know Hillary Clinton, Elizabeth Warren, Bernie Sanders, all of these people are very anti-drug pricing. Oddly, Trump thinks, I think, wants to kind of cap some of those costs too, so they might not be out of the woods, but I don't think that that's something that's going to be an initial move right out of the gate from a Trump administration. So you had a bit of a professional gap today in the IBB. Remember I talked about in the weekend video coming up from the bottom to the top of a range and then coming down from the top to the bottom of the range? So now we're kind of getting kind of toward more the top of the range. I think you can use today's range, the candle of today, as a gauge. Below the low is a little bit more susceptible. You probably would be a short. So that would be 276.07. And above the high of day, which is 289. the ideal scenario would be to have a a pullback tomorrow, and then kind of hold with an inside hammer, like a doji, and maybe go sideways for a couple of days and then take off. So kind of show that it can hold the rally. But I think IBB might be through some of the worst of it, at least short term. I had actually been loaded up in some of these drug companies, actually anticipating a Trump win. I had talked about, what's it called, BMY, Bristol Myers. I had someone had asked me the other day about what I thought about Gilead. That was one I was a little bit pro. I had been along a little bit of Mylan. Some of these stocks that have just been murdered that I thought would probably benefit from a little bit of a bounce. I saw Mylan wasn't so great with their earnings after hours, but the stock seems to be kind of holding up. We'll see how that can play out. But on the whole, I'm a little bit more bullish on those. I don't like the HMOs, though. I think that they are going to see prices coming down, at least until that gets figured out with Trump. As far as Gilead goes, that's one that I get a lot of questions on quite regularly. Let me get the 9-month chart. This was a bit of a, like I said, a bit of a pro gap. Someone was asking me about it the other day, and I said as long as you kind of held the 2-day lows, I was okay with it. I think I had said actually the exact one was over 74.35 as a long. All right, so we're above the 50 MA, and we stalled at the 100 MA. Same thing, just use the low of day, and that, or that 50 MA as a, you could play long against that, and above the high of day, above 80, I guess probably could see like 84, 85. So I like using today's range for Gilead. You'll hear that as a very common theme throughout this video. Shake Shack is one that I like to buy when it's in the lower 30s. I've been short some puts in that, and they reported good earnings after hours. The stock is up. Today was probably a good point to take a little bit of profits at the 50 MA, but if we clear a 50, which we have now done, we'll see the 100 and the 200, which is roughly where we're going to open up around 35, 36. So I like the idea of booking some profits up there, and yeah, that's my story with that. I like taking profits at these moving averages, but I do like Shack on pullbacks. All right, so that's Shake Shack. By the way, that stock has like a 40% short interest, so it wouldn't shock me to see this thing just like maybe get more of a shakeout. You know, I think people got themselves overly short in this stock. When this first came out, it was like a sliver deal, meaning that they did an offering and didn't put out really enough shares. And that's why the stock got killed, because they started issuing more shares, sort of like a Twilio situation, which I, by the way, warned about. And I did quite an extensive discussion on in the weekend review video. If you missed that, look in the details below. You'll see the link to that. And that is a pretty detailed discussion on what I saw in Twilio, how I traded it, and why I didn't really want to be back in it for a while. I'm still very concerned about those types of new 2.0 silliness stocks. By the way, with regard to Shake Shack, 36.92 is the 50% fib of the range, and then the 61.8 is up in the 38s. So I like the idea of booking some profits, particularly into 38s. That was old resistance, which became support, which should probably now be a little bit more of resistance, considering we came up from the bottom of the range. Maybe this pushes up to 43s if we get a real squeeze, but I like the idea of booking the profits into that zone. Bonds. Let me circle back to bonds in a minute for a bit of a reason. Apple, all right, so Apple, I like, again, I'm sorry to sound like a broken record, but I like the range today. Today's low is basically a double bottom, and you have 100 MA just below it. I like being long versus that, and then maybe being an add above the 2-day highs. Anything that holds 111s, really. We closed a little bit shy of the, all right, so we closed RTH a little bit shy of there, but after hours we're at 111s. I like that stock as long as we hold the 111 strike. Below there, I'm a little more iffy, and if we lose today's low of day and the 100, then I think short to 105. So we'll keep it that simple. If we clear and hold, I think we could see 114 114s to 115s. That's the backside of the old up channel. The gap starts at 115.70, so somewhere in there. I do think eventually the full gap will fill all the way, by the way, up to the 118s, but I like the idea of booking some profits in like the 115, let's just say. And then, of course, below the low is a short. Someone asked me about Lockheed Martin. I don't follow this one all that regularly, but I have done some pretty good technical analysis on this. We held the channel low. We're above range. I was hoping for a little lower, believe it or not, with this. I was looking for like 224 to 213. That never happened. Trump has been very pro-military, building up the military. He gives in his stump speeches, he talks about not having to go to like plane graveyards to buy planes. So I'm assuming he's going to build new ones. So that should be good for all the defense stocks. You know, the Lockheed Martins, the Raytheons, the Northrops. That should all be all good in the hood for those guys. So I like the idea of buying dips on that stock from now on. Speaking of other JP names that are up in after hours, Taser, Gap on earnings up nicely. I like the idea of, though, booking some profits on that bad boy into the 25s, 26s, which we are gapping up into. So I do think that that's going to fill the gap at some point. Sorry to jump around again. TASR. But I do think that that will fill the gap to about the 28s. Here was the story. Taser really should have probably never been down as much as it was. There was a New York City contract that they lost to a bidder who undercut them by about half price, and the fear on the street was that other municipalities were going to use that pricing model. That was really not realistic. The other company clearly just basically gave away the deal to get the New York contract and the cred, which I think was very short-sighted on the part of New York to take that deal, but it is what it is. And that was really the concern for Taser. So I like the idea that they're doing a little bit better. I like Taser on dips. I'd actually gotten involved again recently, and now we'll be looking to book some profits at the start, either at around the 100 MA, which is 26.05. So somewhere around there. I don't know that we go right into the gap the first time, but eventually I think that will fill at some point. I do want to hear that conference call, though. Priceline. So Priceline had a bit of a gap-a-rooski. It was pretty amazing. The stock was up a lot during RTH session and then going into the earnings, and now was up even more. I have some projections here. The 1.272 fib extension is 1618.63. The 1.618 is 1799.42. We have a channel high if it were to like do it tomorrow up at 1677. So I'm thinking we're going to see channel high. I'll discuss that in the weekend review video. The ideal scenario, again, would be to go sideways for a couple of days and then take off through today's high of day as the long, like 2-3 days, and then above 1589.21, you could probably get another 100 bucks. So that's what I'm thinking with regard to Priceline. Plus all these people who say they're going to move out of the country if Trump wins, they're going to be buying tons of plane tickets, right? Bonds. This is a bit more delicate, and this is a very important one to watch. All right, so bonds were down big today on a big gap and go lower, and they actually broke down through some important support. Why isn't this showing the way I wanted to show? Let's see, 2 years daily. All right, so we broke through the 61.8. We've come down a lot. So we did break a trend line within a channel, and if we were to go straight down to the channel low, that's 114s. So I think somewhere between 123.15 is the old high from the 2009 financial crisis. So we're still really relatively low on interest rates. And I think the reason why interest rates went up today and the market was okay with it, because whenever the interest rates go up like this, the market loses its shit, right? Sorry, but it does. It doesn't like higher rates. The market doesn't like higher rates. It doesn't like a higher dollar, and it doesn't like lower oil. It likes the opposite. It likes low rates, weak dollar, and strong oil. But I believe that bonds were selling off today for the quote-unquote right reason. They weren't going because of a Fed hike. They were going because they believe Trump is going to it's going to be growth. We're going to really actually have growth. And I think that that was what the market is anticipating, cutting taxes and doing all these pro-growth policies. There'll be more of a demand for money, to borrow funds. So that's why I think that the rates kind of went up. Yeah, so this area to me is going to be key around the 121s is kind of, I'm sorry, that's not correct. 117s are the next big support. That's the big 1.618, I'm sorry, the big 61.8 fib of like the entire range. Of the leg was 125.86. If we can somehow get above 125.86 tomorrow, today was just like a bit of an overshoot and we come back up, things might start to even out a little bit more. But I think somewhere between 117 and 114 isn't that unreasonable to target if we do keep on going, and then that would kind of basically be a round trip to really the low from last year. It's really that we're not really talking about all that much. So that's what I'm thinking. If we were to go straight down to trend, which is not likely, it would roughly be around those 114s also. So it would be a big drop. I mean, 10 points in TLT is quite dramatic. I don't know how the market would really love that. But again, if we're going down in TLT, and I mean going up in rates for the right reason, and that is growth, keep in mind, we only were able to get growth out of these high-moving tech names like Facebook's and get yield out of, like, you know, the Realty Income Corporation, for example. That's a one I like a lot, O. So that's going to, by the way, that has a lot of support a little bit lower, around like $50. I'd be interested in selling some out of the money puts. But that's neither here nor there. By the way, we're at a big breakout for that stock, 55.54. So between 55.54 and 54.44, that dollar, it could be a right or right out trade if it holds. It wouldn't surprise me to see a bounce, but I would feel a little bit, and it's also the kind of the edge of a volume distribution. But I would be more interested, maybe, I have to take a look at this, maybe I'd be interested in selling some puts, but we just had a trend line snap, and I feel like we need maybe a little bit more, so probably closer to $50. I'd be interested in selling like something in the 40s, like 44, 45. Anyway, that was a little off topic, but tangential, so to speak. But that's the reason why the market was okay with the bonds falling out of bed today, was because it feels that we're going to have real growth. And growth is like crack to the stock market. It loves growth. So that's the reason why the market was able to rally today. It was on a growth hope, which you will absolutely get if you get tax cuts. If you take, I don't know if he's going to get the full amount, but if you take corporate taxes from 35 to 15%, you are going to have a bull market in stocks. Anyhow, that's my story. I'm sticking to it. I hope I covered everything people wanted to talk about here. If there's something that I missed that you want to discuss in more detail, shoot me a message on Twitter, which is always welcome. My handle is @JustinPulitzer. A rebroadcast of this video will be put on my YouTube channel shortly. That's Justin Pulitzer Trades. And hit me up with some comments. You know, your comments help me make the videos better. And just so you know, I really was trying to be as least political as I could be today about this. I wanted to analyze the facts, but facts are facts. You know, policies are policies, and that's the way I see them, and that's the way the market saw them today. So I hope that helped explain anything. Anyhow, have a great rest of the week. The weekend review video is going to be a little bit more in depth. I'm going to get into some of these topics in a little bit more detail and be able to show you on the charts the technicals. I try to cover some broad strokes and give a little bit of teasers here, but the big show will be Sunday night. Anyhow, let's have a thank you. I'm glad somebody noticed my call on coal. That's one that I've been talking about for a while. It's been sort of like the angel on my shoulder with the anticipating the election. Anyhow, cheers.